There are changes to various tax-advantaged accounts that can help you save more money this year if you know the rules. Whether you're an employee or run a small business, we're going to review 7 terrific adjustments for 2025 that may allow you to improve your finances. Hi, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with over 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice that you can put into action for more financial security and success. The first change is that workplace retirement accounts have higher contribution limits. Most workplace retirement plans, like 401ks and 403bs, allow you to contribute $500 more in 2025 for a total of $23,500. And there's an additional catch-up contribution for those over 50, which is $7,500 for 2024. It remains the same for 2025, giving you a total limit of $31,000. However, there is an exception for some older plan participants that I'll cover next. Change number 2 is workplace retirement plans have higher catch-up contribution limits. If you participate in a workplace plan, you qualify for even higher catch-up contributions known as a super catch-up in any year you turn 60 to 63. You can contribute the greater of $10,000 or 150% of the regular catch-up amount, which is $11,250 for 2025. 3 is that health savings accounts have higher contribution limits. If you purchase an HSA qualified health plan through an employer or on your own, you're eligible to fund an HSA. Your contributions are tax deductible and your investment earnings are never taxed if you spend them on qualified healthcare expenses. If you're single with an individual HSA qualified health plan, your HSA contribution limit increases $150 to $4,300 in 2025. If you have a family plan, it's increasing $250 to $8,550 in 2025. And if you're over 55, you can contribute an additional $1,000. 4 is a higher contribution limit for flexible spending accounts or FSAs. Unlike an HSA, an FSA can only be offered by employers. It allows you to defer a portion of your pre-tax paycheck to the account to spend on qualified healthcare and childcare expenses by an annual deadline. The FSA contribution limit increases by $100 to $3,300 in 2025. The 5th change is that Roth IRA income limits increase. The IRA contribution limits are $7,000 for 2024 and 2025. If you're over 50, you qualify for an additional $1,000 catch-up, giving you a total contribution of $8,000 in 2024 or 2025. However, there are Roth IRA income limits, and they increase for 2025. If you're single with modified adjusted gross income over $165,000, that's when you're ineligible for Roth IRA contributions. Married folks filing jointly with income above $246,000 are ineligible. Number 6 is that solo 401ks have higher contribution limits. These are a retirement plan for the self-employed without full-time employees except a spouse. For 2025, you can make solo 401k contributions up to $23,500 as an employee, plus you can contribute up to 25% of compensation as your own employer, up to $70,000. If you're over 50, you can contribute an additional catch-up of $7,500 for a total of $77,500. But if you're between 60 and 63, you get that catch-up, that super catch-up of $11,250 for a total of $81,250. And number 7 is that SEP IRAs have higher limits. That stands for Simplified Employee Pension, and this is a retirement plan for the self-employed as well, but those with or without employees. Contributions with this plan can only come from an employer, never from your own funds as an employee. For 2025, the total contributions increase by $1,000 to the lesser of 25% of compensation or $70,000. These plans don't offer additional catch-up contributions. If you want to learn more about investing and retirement planning, visit finder.com. Thanks for watching. If you like this video, please subscribe. You'll get notified when there are more helpful product reviews, money tips, and advice.